Hi there, this is Mike Kramer of Mock Capital. Today is Tuesday, July 2nd, and it's around 5 p.m. New York time. So today we got the JOLTS data. That came in actually better than expected, and last month was revised lower. These numbers continue to be very tricky, but I think overall the trend remains lower for the most part, and that's probably what matters the most at this point. Tomorrow at 8:15 Eastern, we'll be getting the ADP job numbers. We're looking for 165,000 versus 152,000. Then we'll also be getting at 8:30 a.m. the initial jobless claims, S&P Global PMI at 9:45 a.m. And then at 10 a.m. we're going to get ISM Services looking for 52.6 versus 53.8. Prices paid 56.7 versus 58.1. And then, of course, on Friday, we're going to get the change in non-farm payrolls, looking for 193,000 versus 272. The unemployment rate's expected to stay at 4%. Average hourly earnings at 0.3% versus 0.4. Year over year, 3.9 versus 4.1. And so this is going to be the biggest data sets we're going to be getting, at least for the rest of this week. And obviously, the market closes early. On Wednesday, the Fed minutes will actually come out at 2 p.m. Wednesday afternoon. And then, of course, the markets will be closed here on Thursday for the July 4th holiday here in the U.S. When we sing into currencies and we start off with the euro's been able to bounce back a little bit this week. Got above the 10-day exponential moving average, but hasn't really done much the last 2 days after initially popping higher following the French election votes that the market seems to like as of this moment, although you're not really seeing the rally extend further for the euro. So we're going to want to see basically if you can hold above this 10-day exponential moving average and if we can actually start trending higher. Because if we come back down below it, it's likely going to signal that the rally is giving way and the previous trend lower is still taking hold. Again, the euro has tested this lower bound now 3 times, and 3 times at least we haven't been able to break below it. You can also make the same case for the upside. So the euro just really can't seem to make any sort of commitments in terms of direction. And at this point, the best indicator in terms of which way we may trend is really that 10-day exponential moving average, whether it continues to move higher and whether or not the euro can really rise above it and stay above it, or if we're going to drop back below. Because I think if we do drop back below the 10-day, you're going to see the euro break below support and begin to make that move lower. And with the job data we're going to be getting this week, it's very possible that that's ultimately what's going to decide the fate here of the euro. We also have the pound. That looked like it was also moving lower, and it still may move lower. We've only gotten back to resistance in this 127 area. Really haven't made much headway after that. This has been another level of support and resistance now on a few occasions. So this 127 region is certainly a level that we need to monitor and we can use for a support and resistance zone. Additionally, like the euro, the 10-day exponential moving average is in play here. And at least for today, we were able to close above it. We're going to want to see whether or not we can stay above it. Again, because if not, then the trend lower is likely going to persist. Because again, ultimately, it still looks possible to me that this area in here is going to get filled, and we're going to see the pound come down to here, down to this 125 level. When we look at the yen, it just continues to march higher. There's really very little sign of this changing direction yet, although we are getting overbought here with an RSI above 70, and we are just brushing up against the upper Bollinger Band. But again, what this kind of points to is just really the currency just really continuing to push higher along this Bollinger Band, and as long as the Bollinger Band continues to lift and we don't see the yen really get above it, then we can continue to think that we're going to see the yen continue to march higher and potentially onto this next level of resistance I have marked at this 164.30 region. Really, if we go back and we look, the 164.30 region is a level of resistance that goes all the way back to this time period, which was back in the fall of 1986. So the yen's up at spots where it really hasn't been in a very, very long time. And despite the currencies strengthening here in the U.S., you're actually seeing oil prices continue to march higher. Today they were a little bit lower, but again, for the most part, oil is just continuing to rise along the 10-day exponential moving average. It's really not even overbought yet. When we look, you can see the RSI is well below 70. And for right now, the upper Bollinger Band served as resistance for today. This is also an area of resistance in this 83.5 to 84 area. If we can get above that, I think there's room to potentially go to around 85.5 and potentially even retest this 87.30 region or so. When we look at copper prices, copper has actually started to rebound again, although it hasn't gotten above its 10-day exponential moving average, just continues to serve as resistance. And it's been that way now for some time. So we'll see if this continues to serve that way. You can see the 10-day is actually starting to show signs of flattening out. So it's possible you could get a break above it and actually start moving up again. It had looked like for a time that we were going to see the copper move back down to this 420 region, and for right now, this area in here is just continuing to serve as support. So again, and we can even see that the RSI is starting to turn higher. So I think again, just like in the euro, this 10-day exponential moving average is certainly going to be something that we need to watch very closely. And then finally, when we swing over to gold for commodities, gold has been consolidating, really isn't giving us any strong sense of direction at this point. We can see it is making a little bit of a series here of lower highs and higher lows. Basically, as long as gold stays above this 2280 area, again, you're still consolidating. If we break 2280, that's going to potentially open this door to around 2185 or so. Likewise, a break above it could lead us to this region back here at the highs of 24.25. You can see the 10-day exponential is really just flattened out here, and gold is basically just trading along it. So it's possible we just continue to consolidate for a few more days, potentially testing this upper and lower bound in the process until a decisive move is decided. When we look at some indices, we've actually seen the FTSE break down, and actually it even broke this uptrend that was in place starting here from mid-February, and we can see that the trend has been lower. So this is an interesting setup at this point, because we know that for a really long time, the FTSE has basically been trading with copper prices, and so at least at this point we have what could be a minor divergence where you can see that the copper prices are starting to rise. And so what's interesting here is that the FTSE led really copper when the move initially started. So what this sort of tells us is one of two things: that either the move so far we've seen in copper is not the real deal, and copper is going to turn lower because the FTSE is telling us copper is going to turn lower, or that the FTSE is actually going to break out and start moving up again if we continue to see copper prices moving up. We're trading below the 10-day. You can see we tried to get above it for a few days and then came back below. That's why I say you really need to watch it very closely to see, because it really can tell you a lot about where short-term trends are heading. And so obviously if we were to break below this 8100 area on the FTSE, that's really going to be a negative and tell us that we're going to see lower prices, probably to around 8,000. As long as we hold above 8100 and copper prices start trending higher again, then it could be telling us we're going to get a rebound. So I think those are two keys at this point. The DAX basically has not continued to move lower at this point. It's just actually decided to move sideways. You can see that it's really just pushing basically back and forth this above and below this 10-day exponential moving average, again consolidating. It's not really giving us a clear sign in terms of where the trend is, although when you look at the trend in the RSI, the divergence, the movement is lower. When you look at the Bollinger Bands, you can see we're right now in the middle. We're actually kind of right now, you can see that the 20-day moving average is actually acting as resistance right now. And so at least based on the trend, the 20-day probably continues to move lower for some time longer. So it looks to me like if we can get the DAX probably above this 18,350 area to 18,390 region, it could open the door to a move back towards the upper band in this 18,685 area, while a break below certainly sets up a test of the 17,750 region. When we move over to the NASDAQ, we had a really interesting setup going, and then it kind of went out the window in the final minutes of trading on Tuesday, because what we had on basically on Friday was this bearish engulfing pattern that followed the bearish engulfing pattern from last week. So we had these two bearish engulfing patterns, and we also had what looked like a 2B top forming where we had a high here. We tried to take out the previous highs. We closed on the low on the day. And that was working really well, because as long as we stayed below this 19,800 and 19,900 area, it really served as a good indication that the next move lower, the next move in the index was going to be lower. Now today, at least, we were able to close above 20,000 on the day. So right now we're about 100 handles higher. So it's going to be really critical tomorrow to see how this index trades, because if we close back below 20,000, 19,900, it would actually tell us that this was a false move and this was a rejection of the high. So tomorrow's close, if we don't get follow through to the upside, which would probably mean coming to the upper Bollinger Band around 20,250 to 20,300, if we don't continue higher tomorrow and we actually close down on the day, this would be seen in my eye as a rejection of the breakout attempt. And it would be, again, depending on where we close, a potential sign that this market really is running out of juice. And so this is how we trade over the next couple of days will be very important. Tomorrow, obviously, being a half a day, and then, of course, the job report on Friday are going to make for things to be rather interesting, and it's going to tell us a lot about where this market's going to be heading. On the S&P, it had a similar setup with the same engulfing pattern. Also, we tried to break out, came back below and closed below the 54,900 area. Today we closed about 20 handles above it. The S&P actually closed below this candle, and so we still have this potential here. Again, you're going to need to see some sort of confirmation move higher, which will probably take us to the upper end of this trend line that's been nicely in place now, going back to July of 23. That would take us back to this area around 55.50. Likewise, if we don't get a move higher, then it's likely going to suggest that this move was a false move and that we're in some sort of potential topping region as well. Again, both of these indexes are extremely overbought, and you're really not getting confirmation at all in the Dow, which is still, basically below where it was back in the middle of May, which was basically the highs that we saw in the middle of March. The Dow, again, had a positive day today, but we've really just been trading sideways. You can see we didn't have that reversal pattern the same as we did on the NASDAQ and the S&P. So we have a little bit of a different scenario here, just trading basically between the 20-day moving average and the upper Bollinger Band. You can see the RSI, the 10-day exponential moving average, has also been acting as a support level as well. So right now, at least, it becomes a little bit clear here that the Dow needs to get above this downtrend around 39,500. If we break above it, that obviously opens the door, and it's a big positive sign, sending it to around 40,000. It would serve as confirmation as well to any move higher that you're likely to see in the S&P and the NASDAQ. Otherwise, again, it's kind of continuing to be a divergent market, which is something we've really seen quite a bit of. And I'll just point out, lastly, the HGX, which is the housing sector index, has been extremely weak. And we'll see, because today you can see the last 2 days we broke below what could be a neckline region of a double top. Now we'll have to see what happens tomorrow, because if you can see that we're just slightly oversold here on the Bollinger Band, but the RSI is still nicely above a 40. So the reason I'm pointing this out, it's not something we normally follow, but again, it just is another divergent index. And typically the HGX tends to trade or can even lead the S&P 500 at times. So it's worth noting that there's a rather large divergence developing between the two. And it's another sort of index and indicator you can keep an eye on to give yourself a heads up in terms of where equity markets here in the U.S. are likely to go. Anyway, I hope you find this helpful, and we'll see you again next week. Bye.